Shares of Pinterest were up about 24% in extended trading hours today. As of this recording, they're up about 18 or 19% after a Wall Street Journal report came out outlining a huge stake taken in Pinterest by Elliott management. In this video, we're going to be discussing this piece of news specifically and why this is so crucial to Pinterest's future going forward. So as of this recording, Elliott Management is the biggest investor in Pinterest, acquiring a stake of over 9% of the company. The Wall Street Journal highlighted that the two parties, Elliott and Pinterest, are in active talks and have been for the past several weeks, but they did not disclose what is the nature of the talks. And looking back on this piece of news, it was really signaled through the options market. There's been unusual options activity with regards to Pinterest for the last week or so, which usually means that something big is going on behind the scenes because someone always knows when there's big news. And we saw that telegraphed throughout the week with the unusual activity in the options market. And the timing of this news is also interesting. If you'll remember my recent video on Ben Silbermann, the founder and the CEO of Pinterest for 12 years, who just stepped down in June and was replaced by Bill Ready, a Google executive specializing in commerce. Pinterest has highlighted that they want their next shift to be in e-commerce, and Bill Ready was the person to make it happen more so than Ben Silbermann was. But Ben Silbermann is still very much a part of the company. He's now the executive chairman and he owns about 39% of Pinterest voting shares. So he has a huge say in terms of where the company is going to go in terms of their next direction. They have to vote on all the big decisions. And since he has 39% of the voting shares, it's going to be pretty much impossible for Elliott to elbow their way through without his explicit approval. And if you want more details on that specifically, I've made a video about it, and I will also outline that in the description, and at the end of this video, I'll tag it. And of course, the backdrop of this is the changing of the guard in terms of senior leadership and executives at Pinterest. We've seen a lot of them departing the company since fall of 2021 and continuing to do so as late as June when the CEO left, right? So now that we've highlighted a little bit about Pinterest, let's talk very briefly about Elliott. They're known around the block as one of the toughest activist investors on Wall Street. They have about $50 billion assets under management as of the end of 2021. They also have a private equity side of their business that sometimes bids on companies that are the targets of Elliott's campaigns or their activist missions. And overall, they have a heavy influence on forcing change within the companies that they take a stake in. If you'll remember, in 2020, they took a $1 billion stake in Twitter and they began enforcing changes. They added 2 new board seats from 8 to 10 and eventually put pressure on Jack Dorsey, who later stepped down from his CEO position. In 2019, Elliott also took a stake in eBay. They were added to the board of eBay and they criticized the company's performance, where it was headed, and 6 months later, the CEO of eBay resigned from his post. So Elliott has significant sway in terms of these decisions. They've been proving time and time again that they can actually sway the opinions of shareholders, and they aim to do the same with Pinterest right now. And so the questions outstanding are really, why Pinterest, why now, and what is Elliott looking to achieve? Like, what is the concrete goal here? Well, we know that Pinterest has had a rough year to date. They're down about 50% on the year. They're trading at their 2019 IPO level of $19 a share, despite having surged to over $80 a share in 2021 and having been the target of several acquisition rumors with regards to PayPal and Microsoft. Pinterest reported their first full year profit in February with over $2 billion in annual revenue. The revenue grew 18% in March year over year, but monthly active users has been declining, and this has been the story of this company ever since the fall of 2021. It's been declining for several quarters, about 9% down year over year, and the company posted a very, very slight loss of about $5 million in the latest quarter, but on an aggregate yearly basis, the company is profitable. They're sitting at about $12 billion in market cap. And just another thing to note on their financials, Pinterest has about $3 billion in cash on their balance sheet. That's about 23 to 25% of the company's market cap, and they have no debt on top of this. So absolutely fantastic bulletproof position for the company to be in, especially considering we're in a macro downturn. Earlier today, a negative report came out from Morgan Stanley stating that Pinterest is down to 2017 levels of engagement, which presented a risk to their ad revenue model. Although it seems that these metrics have been public knowledge for several quarters, despite the headlines today, which seem to be a little bit of FUD. So I didn't really understand them very much because we've known this fact for several quarters now. On a more positive note, the CEO, Bill Reddy, has been very quick to implement some of his changes into that e-commerce decision for the company. Just yesterday, on July 13th, Pinterest poached the global head of YouTube Originals to join a newly appointed role in Pinterest as the head of programming and originals. So it seems as though Pinterest is taking a page out of YouTube's growth playbook. So if we look at it from Elliott Management's perspective, how can they now take advantage and improve the situation at Pinterest? How can they create more shareholder wealth? Well, much of the chatter around this news has been with regards to the potential of an acquisition from a bigger player or a leveraged buyout. And just for those that don't know, a leveraged buyout is when the buyer, in this case Elliott, uses debt, so they're financed from a bank, to buy up the target company, and then they put up the company's assets as collateral as they eventually repay that debt. In a leveraged buyout situation, the buyer would take a controlling interest of the company. So in this tweet that I've put up on the screen, we can see how that might look in a realistic terms if Pinterest goes for a leveraged buyout at $35 or $45 a share, whatever that agreement is, and why that might make sense in the wider scheme of things. However, one thing to note is that it's going to be very difficult for Elliott to get their way on this one without having explicit approval, right? The goal here at a high level is still to increase shareholder wealth from the existing prices, from the high teens. If there is some type of big news, an offer that's presented or a buyout that's announced as a result of this Elliott Management stake, yes, the shares are going to rise higher than here. My guess is anywhere between $30 to $40. So we'll see how this shakes out. Both parties are still in active talks, and we could see a deal being presented to the market as early as next week, which makes this situation for Pinterest very interesting, as the majority of retail investors are still underwater on this position. If they haven't been dollar cost averaging, if they're just, they bought in 2021 and they're holding all the way through and a deal gets done at $35 or $40, those retail investors might still be underwater on that position, right? So one of the things that I've been doing is dollar cost averaging into a couple of my positions, including Pinterest, which I announced on July the 5th. I'm closely monitoring this situation now with Elliott to see if I should be even adding a little bit more or just holding and staying put. But either way, I'm very bullish on the direction of the company. The new CEO has hit the ground running on the pivot to e-commerce. And while I normally focus on the long-term prospects of the company as a whole, while I'm bullish on Pinterest as a company, it is beneficial to monitor what happens through this active investor stance, because that can also significantly impact your investment, right? If Elliott takes Pinterest off the market, or if there is a buyout, or if there is a merger, that's going to impact your investment in that business that's not necessarily linked to business fundamentals, right? So this news will impact you depending on what your cost basis is on Pinterest. If there is more news, or if I do hear something, or if there's anything interesting to report on, I will make sure to make a new video about it. Pinterest is one of my larger positions. I'd like to think that I know that position pretty well. And like I said, I'm very bullish on the company and have been recently buying more. Please feel free to drop your own thoughts in the comments. I'd love to hear from you on what you think happens from this Elliott Management situation. For right now, this is the Fundamentals Investing Podcast. Thank you so much for listening.